Hello everyone, welcome back to EQSIS. In this video, I'll be sharing my recent observations on Indian equity and derivative markets that gives us a clarity that what we can expect for the second half of this month. Myself Murugan, I'm a SEBI registered research analyst. Make sure that you follow our regulatory disclosures and disclaimers towards the end of this particular video. I may use some company names, but that's not as part of our recommendation, just that as part of my informational sharing on that. I'll be taking FII open interest as my primary part of research today, and I'll be using charts to make a relative analysis between Nifty and Bank Nifty. And towards the end, I'll be using that company to decide where to actually create positions. Let's quickly get started. To begin with my research, let me get into EQSIS website, EQSIS.com. There you see apps, EQSIS Primer, a research platform which has a lot of tools. But if you get into the tool section, you have a derivative scanners. Underneath, you see FII open interest analysis. This will act as my primary research today. And here you find a fund flow analysis along with change in contract to get a specific idea about stocks. By default, it opens index segment with the futures, right? And it gives us a 16th May as a recent date. But when I look at the historical data on 15th May and 13th May, I see a significant open interest being built by the participants. To begin with 13th May, we can see that FIs have added a significant short position and the counter positions are created by the clients, the retail people on the long side. So in general, that is seen as actually a bearish expectation because the stronger hands are adding the short position and the weaker hands are adding the counter long position. So that may not actually sustain because the weaker hands long positions are generally expect the market to go down. That's the primary thought process on it. But in a subsequent days on 15th March, everything got reversed because in a couple of days that FI started adding a significant long positions and the counter shorts are added by the clients. So we see that there is a change in behavior and that too happens in a significant note in few days. So to make a fair understanding, we can get into a daily charts and look into this. And this happens to be the 15th May where we see an impulsive bullish behavior. And this is on 13th May. And this 15th May happens to be Thursday, and we see that last minute recovery happened along with FIs and open interest that actually adds some sort of uncovering scenarios also happening. So pay attention to that, and that can actually indicate the market's a bullish expectation for the second half of this month. And if you go back to 15th May, and most of the positions are actually created in the June and July month contract where the concentrations are so high, but I agree on the absolute open interest that a May month Nifty added a significant open interest. But now to understand any stock specific movement, I wish to get into a stock segment here. And if you get into a stock segment, there you see the FIs have actually added a significant long positions and they've reduced a significant short positions on 15th May. And the counterpart, the clients have added a significant short position and they've reduced a significant long position. So understanding this, the FII or a stronger hands note in Indian markets are adding long positions and the clients are actually exiting the long positions and adding short positions. So now we need to understand where exactly these long positions would have been built. See, I agree that we have Muthoot Finance here and adding about a significant change in open interest. And other one is HDFC Bank. And if you go back to Muthoot Finance here, I agree that there's a big short here. And if you look at, although it is 3,519 open interest got built, it is all specific to one day. And mostly it is highly traded one with about only 15% concentration. Am I right? Because that day, the trading volume is so high and the open interest is just peanuts there. Whereas if you look at HDFC Bank, okay, most of the trading volume happens to be change in open interest. So that's quite concentrated. So that is one primary reason that I get into HDFC Bank, and this is specific to June contract. So if I get into HDFC Bank here, look at this particular behavior. Okay, now this happens to be that 15th May where we got a significant addition in open interest. Meanwhile, FIs have added a significant long position. So that gives me, along with a positive change in price, gives me some understanding that FIs are actually accumulating this particular stock. In line with that, if you scroll down, if you look at the history on 15th, 14th, 13th, or 12th, we see that HDFC Bank had a very similar behavior of consistently adding positions in the recent times, starting from 9th, I'm right, from 9th, I know from June month contract, they started adding positions consistently. And this is a kind of consolidation which happened. Another stock in a very similar fashion we found is actually the ICICI Bank. If you get into ICICI Bank, and ICICI Bank looks even better for a simple reason, because pay attention here, on 12th and 15th, they added a significant open interest. So this is on 12th, okay, you see a big green candle, and on 15th, again a big green candle with a couple of red candles in between where they didn't add anything on it. So ICICI, they are specifically choosing only long positions, and in HDFC Bank, it is getting traded along with some positions are created. So with respect to HDFC Bank and ICICI Bank are actually getting some, some interest from the institutions. So now it's time to get into charts to apply. Is there anything, a demand and supply to reveal? Let's get into the price action. Before I go for it, let me first make comparison between Nifty and Bank Nifty here, because in the recent times, especially last week, and Nifty managed to outperform than the Bank Nifty. If you want to make the comparison, what we can do is we can go for it and make this comparison here, which is a bank average. Am I right? So if you look at the recent times here, the Nifty managed to give a recent rally here. And if you look at this, a bank did a kind of consolidation. So does it mean Nifty actually outperforms Bank Nifty? Yes, it is true only from a short-term perspective. But if you look at the overall picture, then you get to know the reality of what it is. Because if you look at the a bank here, it actually did a kind of a very good performance in the recent times. And if you look at this particular section, overall, the Nifty is actually an underperformer when compared to a Bank Nifty, because a Bank Nifty did actually break the recent high and it actually consolidates comfortably above this particular area. Whereas if you look at the bank, if you look at the Nifty, Nifty is still struggling at this particular area. It didn't actually break comfortably above this recent highs. Okay. So what's happening in the recent times is basically Bank Nifty is consolidating its recent gains. So the next move can comfortably be there in the Bank Nifty, not in the Nifty, is what we expect. So we expect Bank Nifty to resume its course and not Nifty to outperform Bank Nifty for the second half of this month. So that's one observation that we have on the broader indexes. So coming back to the stocks here, okay. So to begin with the stocks, let me go for HDFC Bank here. HDFC Bank here. So go for HDFC Bank here. So to begin with HDFC Bank, the very first thing that I wish to highlight is this is the breakout area. Comfortably, this breakout happened. And here there is a gap, and that gap remains unfilled, okay. And if you look at, a relative analysis over Bank Nifty with, HDFC Bank, look at this, the early indication, there is a negative divergence. Sorry, there is a positive divergence here, because if you look at the index, it is actually making a lower bottoms. Whereas if you look at the HDFC Bank, it formed a higher bottom, the same side. So right at this area where we were able to see, the stock started performing well here. The stock started performing well. That's ideally the point of entry. And even the current consolidation is advocating that it has a long way to go forward. Although you see a bearish engulfing, a complete bearish engulfing, the market is still struggling to go down and it is able to consolidate here. So I think any further move, one can confidently expect from the banking side, and especially HDFC Bank can lead the game. Along, probably you can even compare this with ICICI Bank. ICICI Bank here, because if you look at the ICICI Bank, it still shows a kind of running correction, which is a very powerful, and all divergence and everything remains true even for HDFC Bank and ICICI Bank, except some PSU banks and some private banks. Other banks did show the very similar behavior, but ICICI Bank and HDFC Bank, for various reasons, showing a strong momentum and strength to outperform. So I hope I've given you a fair amount of clarity, but I've used a lot of names in this particular video. I have a very humble request. Don't take this as a sole part of your trading decision. Rather, take this as a kind of hint and information. Rather, you can go and do a further research, because this is not our recommendations. These are just the informations that we shared about it. So do follow our research disclaimers. To find our research disclaimers, what you can do is you can go to EQSIS.com. And if you go down and you have a separate area where we have a regulatory links, and in that you have a regulatory disclosures and the charter that what we have and privacy policies and everything. So do make sure that you follow all of them and take a call accordingly. Thanks for following our video, and I hope you find this video interesting and good. Make sure that you subscribe and share this particular video so that it helps the other needy research traders as well. Happy trading.